What is good, everybody? Long time no see. Let me just make sure. Yep, mic's working. Long time no see. Today I'm making this video for only like two reasons, maybe three. But number one is for myself because today I traded amazing and I really want to just make a video to recap my trades so that I can look back at this and just, if I'm ever, misaligned with my trading, I can look back at this and be like, boom, that's what I gotta do again. Stick to those, right? And then also for you guys to see my trading, and maybe you guys can take some things away from this and add it to your own. But first off, I want to start this video by saying thank you to this man named Isaac. If you guys don't know who it is, let me show you his account right here. Here's his YouTube channel, but this guy trades the same way that I've been trading for some months now, but he's not taught me anything like special, and like you guys probably know all this information as well. If you don't, you're about to learn it, but just seeing him execute it, see the way he talks about it and the way he actually trades it and just enters the trades, it just has given me confidence and just kind of opened my eyes. Like I see the actual trades he's executing on in the same day that I'm doing it. He traded in the exact same way. It's a very simple, clear to follow model. So that's why anyway, I just want to give a thanks to him because it's helped my trading dramatically in the way in which I think about the market. But before we hop into the trades, I do want to play a little recap, pretty much just me hitting take profit on this second trade of the day. So I'm going to go ahead and play that now for you guys to watch. So that was the second trade of the day. The first one I actually didn't even get entered in. I low-key missed it, which is why we entered into that second one. But nonetheless, both trades were very valid and very beautiful. So now let's actually kind of get into the trading plan, which again, as you saw Isaac earlier in the video, it's pretty much the same trading plan as his. I just kind of reworded it a little bit, made it fit mine. But overall, it's pretty much the same game plan. And I guess you could say I got this from him, but I was trading the same thing anyway. A lot of people trade this. It's basically the forever model, but he did kind of help visualize this, right? I guess some things over here hidden, just personal notes for me, but for you guys, this is what's important. I don't know if you need to know this here, but basically trading plan number one is mark out the liquidity. The most important parts of liquidity, in my opinion, are going to be session highs, session lows, and it's also kind of tied with previous day high and previous day low. All those things you need to mark out: session high, session low, previous day high, previous day low. Boom. After that, you want to mark out untapped PD arrays, high time frame fair value gaps, order blocks, equilibrium of ranges, things like that. Then you want to try to identify your higher time frame bias, which I'll get into a little bit, but basically you want to think about, is price going to go up or is price going to go down? And one thing that I like to think about, a couple things actually, is price respecting bullish fair value gaps or bearish fair value gaps? Are we sweeping liquidity and moving in the other direction? Where are we coming from? What is, like, things like that. Have we swept out lows or have we swept out highs? Like, where are we coming from? Have we sold off? Where's the last change in state of delivery? Things like that, right? So just thinking about where we're coming from, what we're doing in that aspect. Also, just literally looking at the higher time frame trend, like in the 4 hour, how we've been going up, have we been going down? That's gonna help as well. But the thing I really have been thinking about, which has changed the game for me, is what liquidity is easiest to grab. So like if you see a bunch of trend line liquidity and like boom, we're also in a 1 hour bearish gap, but the trend line liquidity is below us, like we're probably gonna reverse that and take that liquidity. You know what I mean? If it's easier to take that than it is something harder. So like just you have to kind of think about what's the easiest liquidity for us to grab. Then number three, once I have all that, I just wait for a high time frame SMT. Now, this was crucial. Shout out to Isaac for this because I was just looking for any SMT, like, oh shit, we swept out the high time frame liquidity on both pairs, and then we scale down and then we see a 1 minute SMT. No, that's not going to do it. It's literally, you need to see that SMT on that high time frame like level, or at least on the 15-minute time frame. So the SMT has to be on the 15 or higher. Then if that happens, number four, boom, look for the entry. Now in terms of the entry, I simply boom, drop down into the 5 or the 1. I never go into the 4, 3, or 2. It's on here in my trading plan because I am allowed to, but I just hardly ever do it. I couldn't tell you a trade I've taken like that, but I mean, in theory, if there's no fair value gap on the 1 or 5 or whatever, but it's on the 3 or 2 or something, like boom, I would use it there. But I'll be real, I never hardly do that. I feel like I'm over explaining, but I had to get through this, and I would be thankful if somebody explained it for me. So anyway, yeah, I drop down into the 5, 4, 3, 2, or 1, and I look for simply, boom, a change in state delivery with an inverse fair value gap. Now, this does not have to happen every single time, and you're going to see today how I missed a trade because I was looking for exactly that. But you don't have to have that. You could also have like a change in state delivery with the breakage structure. Like if you have everything else, you're good. Once you get down into the low time frame, it's not too important. You just want to see some confluences because the rest of the confluences should also be already aligned, and you already have a ton of confluences. So then you just need to change in state, breakage structure, inverse fair value gap, or fair value gap, order block, like whatever you want to do, just get entered basically. Just wait for some sort of confluence. Or if you're not trading a reversal, you can trade a retracement into like a 5-minute fair value gap and like a 1-minute impulse out, something like that, right? Which you'll see in the trade. Or actually, you probably saw that in the recap already, the time lapse. So, lastly, actually, no, we'll get back to that. But that's pretty much the trading plan. So as we do the top-down analysis here in just one moment, that's the plan I went into. So screenshot that, remember it, whatever. This is risk management, you can look at it, but I'm not talking about it today, okay? Onto the trades here. Okay, so we're on the charts. You can see, boom, short. You saw this one. Now, how did I actually get to this? Okay. All right, so I backed it up right now just to the replay, right, to mark it open, so I can kind of show you what I was marking out. So, what I was doing here, I'm on the 1-hour time frame because at this point, we know. Sorry, I'm trying to shrink this a little bit. The weekly open is all the way down here. So if we look at our weekly profile, we opened up the week and we broke down below this, which is our manipulation. So accumulation, manipulation, and then we simply distributed the entire week, right? So then for Friday, we're thinking that we should return back to at least equilibrium of the range. So we kind of have an idea, like one, we're trading at all-time highs, so we'd be looking for longs. So we're open to longs because we know how all-time highs trade, and we just keep going up, right? So in the back of our mind, we're low-key looking for longs. Also, very sorry if you can hear the vacuum, but if you can't, that's great. Sorry, nothing I can do about it. They're vacuuming, okay? But anyway, so we have that in the back of the mind that we're looking for the weekly range to be the equilibrium point tapped, and we're also looking for all-time highs to keep getting ran, which I know that's conflicting, but we're looking for whichever one's aligned better, okay? Bro, I was going to wait till the vacuum stop, but it's not going to stop, so I'm sorry. Just bear with me. I'll try to speed run this, okay? So the things I was marking out here was I would marked out previous day high, previous day low, but previous day high had pretty much already been ran by now. So what I like to do is use this indicator here because it shows the sessions, but it only works on like the 15. So if we go down into the 15, what we'll see here is we had already swept out these London highs, so I didn't need to mark those out. London lows had already been swept. Asia lows had been swept, so I didn't need to mark out any of those. Like normally those are all the things I'm marking out, but today those were already hit. So the only things that were really important for me was we were reacting off the daily open. Interesting, but what are we going to do off that, right? So I marked out like this low right here. I marked out this high up here, obviously, because that's just the high after we swept London highs. Pre-market highs, like 5 a.m. highs. Not some super important high. It's just this is a like if you look at the high time frame and you see a nice swing point, that's going to be an important liquidity point as well. But not the most important is going to be session highs and previous day high, previous day low, session lows. Those are the most important. But also if you have a high time frame swing point, that's going to be liquidity as well. So that's why this is marked out, and we mark out ones like this. Okay. But after I marked these out, we had daily open, we had this here, we had this previous day low down here as well, and we have the idea of going down to the weekly equilibrium of the weekly range. Okay, so we have a ton of bearish confluences on top of, if we go here to the hourly time frame, we got this nice change in state delivery already, like right here or somewhere in here, anywhere, I don't know, not very clean, but we got a change in state delivery on the 1-hour time frame, bearish. We also are trading, or we haven't traded up into it yet, but we have this 1-hour bearish fair value gap. So that was one of the things I was looking for, is us to trade up into this to continue our momentum to the downside. What is going on here? Yeah, I was looking for us to trade up into that to continue to the downside, or I was also saying, okay, we could also sweep out this low here, which I had marked out as I showed you just a minute ago. We could sweep out that and go higher, or potentially sweep out this and go higher. But, obviously we're not just going to dump down here and then get long. So it'd be more preferable to come up, sweep this, and go down towards these, right? Because this is going to be the easiest liquidity for us to grab to fuel us for the move down. But if we actually think about it, like this liquidity just got grabbed here, so what's next? Like we'd want to go down and get these lows, return to equilibrium of the range. So that's kind of the things I'm thinking of to get my bias, right? I had the all-time high bias in terms of just keep longing, but today was the first day we could actually take shorts because we had already had this nice sell-off. We had this hourly fair value gap. We had the equilibrium of the range for the Friday of the weekly rate, right? All these things, okay? I'm trying to just drill this in your head because we would not normally be looking for shorts today. The only reason we were is because we'd already sold off. We had that gap. And yeah, the weekly range, right? Holy shit, I keep repeating myself, but it's very important. Sorry about the vacuuming. So once the market opened, I was sitting on the 15-minute time frame because, again, if we look at the strategy here, we have to see, like now we have a high time frame buy, so we would like to see it bearish. So we want to get shorts if possible. We are open to longs if we sweep out enough liquidity, but we're looking for shorts. So then now we have to wait for high time frame manipulation, which is on the 15-minute or higher. So I was sitting in the 15 as market open right here. Okay, what I was waiting for is us to hopefully tap into this 1 hour fair value gap and get a nice reaction, like a SMT, maybe off like this high right here, or this high right here. I marked out all of these highs, praying for an SMT, and then finally this one up here, right? Now obviously if we play this out, you're gonna see, boom, I was on the 15, 15, 15, and you can kind of see how it played out. I just went way too far ahead, but right here is the SMT, and you see this because, boom. Oh, wait, here I'm on the hourly, my fault. But if we go into the 15 over here, you'll see, boom, right here, we took out this high, and we didn't take it out over here. So whenever we get that, if we go down into the 1 minute on both of these, you'll see exactly what I'm talking about here. Oh yeah, we are right here. Boom. So right here is exactly where it took it out on this candle. And if you come over here into the 1 minute on this one, oh, we already are. Boom. We look over here, because a lot of people are looking at this and like I used to think the same thing, like why did you not enter on this breaker structure and this inverse fair value gap, right? Like we did the same thing, but you didn't enter here. The reason why is because we hadn't had the SMT yet. The SMT did not occur until this candle here, and as you can see, it's this high here is the SMT. Like look, whenever I hover over, you can see the vertical line on it right here, same one. So once I saw the SMT, that's what signaled me to come down into the 1 minute. I wasn't even on the 1 minute for these candles right in here. So I was waiting until we got that SMT, and once we got that, that's when I went down to the 1 minute, and then instantly, now we're just over here. So this is the high. I marked out this right here as, okay, I already had it on here. I was about to draw it again, but it's right here. I marked out that change in state delivery. So once we close below this, because change in state is what the candles that tap into it, the last up close candles that tap into the high time frame PD array. So it would be this one right here. Boom, we close below that. That's our change in state of delivery. Now what is this right here? Boom, that's our breaker structure. So we had breaker structure and change in state of delivery. Those are the two confluences we needed. Now, I know I said those are the two, but as you saw here, I only had CISD plus IFVG. That's what I was waiting for this morning whenever I was trying to take this trade, and we didn't get it, so I missed this trade. But upon looking back at it, I talked to Isaac a little bit as well, and it was totally fine to take this because what did we have? We also had a BLS. We had the breaker structure. So you do have to have the CISD probably. Well, you don't have to. You could also just trade an IFVG plus BLS, but that's going to be a CISD as well probably. So anyway, you just need two confluences basically at that point because you already have so many others. You already have the 1 hour fair value gap. You already have the return to the equilibrium of the range. You already have liquidity down lower because we have, at the time we had this liquidity here still, we had this liquidity here, and we had previous day low as well. So we had all these liquidity stacked up, ready for us to attack. So simply, once we close below this change in state delivery and the market structure shift, we could, boom, simply market order, market entry right here. Then you could go stop to break even right here at these lows, or you could partial there, or you could do same thing right here. I personally would have partialed probably at this low here, but actually no, I probably would have went to break even right here, not done anything at this low, but I would have at this low here. So then this was my first take profit on this, and then I would have actually held for previous day low for the second, but I would have moved my stop to break even. And if you see here, so that trade played out, boom, market enter, played in, TP1, again, you would have moved stop loss to break even here, TP1 would have been this low here, so you'd have got TP1 off, TP2 would probably be like this, and then TP3, previous day low. So let's see, TP1 definitely got hit. Let's see, and then I'm pretty sure, yeah, so we get a nice move to the upside. Let's see, do we get stopped out at break even? Not quite yet. But we do end up getting stopped out break even later, and yeah, right here. So you do get stopped out break even. So you got TP1 stopped at break even, but again, I missed this trade because we didn't get the inverse fair value gap. But still, looking back on this is definitely a valid trade because we did get the breaker structure and the closure below the CIST. Okay, so now if we get out of here, let me set up the second trade. So that's trade number 1 today. Now for trade number 2, this is a PM session trade, which I don't trade very often. But what we were doing is I still felt like we were bearish because why would we take out these highs up here? We already confirmed they were like highs with the SMT. Granted, I'm pretty sure if we look over here, these are probably SMTs as well. But because I'm not gonna lie, these things are low key out of sync. But like, yeah, we probably had. I mean, not really. We didn't actually have any SMTs. Oh yeah, we did. We had this SMT here. Boom, boom, right? SMT there. So low-key we had a bullish SMT, but again, all the other confidences, and we're focusing on NQ for the most part, is why we were still bearish. So, but again, I wasn't really looking to take anything at this point. But here we are on the 5-minute. You'll see, maybe. Or why is it not updating? Oh, because I'm on the 15. Nice. Boom. This is what I saw. Okay. So on the 5. We get this huge candle drop down. I wasn't even trading. I was barely on the charts. I saw charts. I was like, oh my god, okay, we did that. And the thing is, a lot of people are like, and I would have thought this too back in the day, is I saw this sweep right here, and I'd have been like, okay, we swapped liquidity, and now we're looking for a move up, so I would have been looking for longs, right? And I know people were looking for longs in this, but not me. Now here's why. We have this previous day low, okay? Think about it. We get this huge move down. Tell me why we just want to sweep the 9 a.m. low. Why do we just want to sweep that? What do we want to go higher for? I mean, there's nothing else up here other than just a TGIF. Thank God it's Friday, just send it higher, right? But there's no real logical reason. I mean, granted, we have these things, the liquidity here, we have this SMC on ES, but those don't really matter to me because we still have, instead, why would we not just go right here? Like, think about it. Think about it. What's easiest liquidity? This here, bro. This here. We just sent down what's easiest liquidity. Previous day low. That has to be the drawn liquidity. What's below it? Equilibrium of the weekly range, but we're already sending to it. This is just a crack in the correlation. But we drop down. This is just showing us we want to go towards it. That's our impulse move towards it. Now, what are we doing? We putting in a 5-minute fair value gap. So let me let price play out a little bit here. So I waited. We had this 5-minute fair value gap here. So I marked out, boom, 5-minute fair value gap. I simply waited for price to trade up into it. Once it did and hit that, I went into the 1 minute. Here I'm already in the 1 minute, and now all I'm doing is I was like, okay, literally, when these candles were printing, I'm thinking, okay, all I'm looking for here is I literally just want to see, a change in state delivery first, maybe an inverse, and look, what do we have right here is an inverse, okay? Now I know you're thinking, boom, you need to see a change in state, so we're gonna have to put in something like this, and then come back down, right? But if you actually refer back to our trading plan here, what do we need to do? Well, once we see all these things, and you're thinking, do we have the SMT? Yes, we do. Remember, we have this high time frame SMT, but also we put in another SMT on this high because that high is this high right here, which you can see, boom. Or actually, sorry, it's not there. It's still this SMT here, right? So we just put in another SMT, so this high up here should be protected. We've already SMT'd. Now, and that's the high time frame. This is just the 5-minute retrace, which is the second option. So we don't need all of these same things. We simply just waited for this. Now, once we see a good move out of here, which was, you could use any confluence, I just simply used this. Let me delete this 5-minute now. I just use this 1-minute inversion, right? So once we inverse this gap, that's all I waited for. Boom, inversion. And then I'm not gonna lie, I was just fumbling around with my entry here, and I just market entered once we got up here, which is why my entry is right here, okay? And all I did is I targeted this low and previous day low, which I should have low-key probably done this, but I'll show you it doesn't matter because it doesn't end up playing out. But you already saw that from the recap. But also what I did is I was on ES, and I was marking out this low again here because, sorry about the dogs if you can hear those, but I just wanted, I wanted a partial and move my stock to break even the second we hit these lows here, because this is, again, PM session. I don't trade it too often, so I didn't want to get an SMT here and get taken out. So once we hit these lows on either one, I was moving my stop loss to break even and partially. So if we just let this thing play out, which you already saw in the time frame, but we got a nice reaction off of it, almost moved straight into this level. But then we kind of chopped around a bit, finally get it right here. So we hit that take profit, move stop loss up to break even, and then you see we get a nice sell retracement until sell off back down to previous day low, take off the full position. I should have maybe held to here, but again, it never even ended up playing out. So if we go here to the 5 minute and just see how this thing goes. You see, it almost did. We could have market ordered here or something, but then for the rest of the day, we just chopped. So all good. But again, that's pretty much the trade for today. So that's exactly how I did it. Again, it's this trading plan here. Now, lastly, I want to talk about this other part over here. It was actually changed for me is one, just doing this plan here and like the 15-minute SMT, that was a key thing. Understanding session highs and lows being so important with previous day high and low, important, but the 15-minute thing, huge, huge, huge. And then next is the entries, right? Understanding it doesn't have to be perfect. You just need to change the state, or you just need like one of these or two of these. If you have all the rest, you just need one or two of these to align and you can enter. But the main thing is this over here, okay? What I've started doing is like, it's so bad to go like strategy hopping, all this stuff. Everyone says it all the time, blah, blah, blah. But genuinely closing Discord and not looking at what other people are doing, not having somebody in your ear, not listening to a stream, not looking at other people's trades, not talking to somebody, not second guessing, none of that. Literally make your plan in pre-market and stick to it. Right here, create your plan and stick to it for the full session. But because think about it, you see other people trade other ways, blah blah blah, things like that. There's other strategies, other model, and you're like seeing it in real time. So you can test those. Just you have to be on a paper account or just forward test it. Just mark it out and test it. Don't actually take it and execute on it. Only execute on your model that you laid out or that plan that you created going into the session. Don't keep flipping things. Don't do any of that. Only trade the plan that you had going into the session. And remember, yeah, you can test those other models, just only execute on the one. And stick to your plan and don't watch other people. Don't listen to other people. Don't look at other people's trades. Don't go on Instagram and look at the stories of other people posting their wins for the day. Don't do any of that until you're done trading for the day. So that is how I caught this trade today. That is my updated trading plan. That's how I've been trading. And so for anybody, that wants it, there it is. But hopefully this has been helpful for you guys. Hopefully this is helpful for myself to look back on. A very good day of trading. I want to keep this momentum going forward and just keep referring back to this model and staying consistent on this model. I do think payouts are on the way. So I hope you guys enjoyed this. And I'll see you guys next time. That's all I got. Peace.